The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. I am your host, Ken Shreve. Thanks very much, as always, for listening in. If you want to call into the show, the number to use to get through is 877-927-6648, 877-927-6648. My show airs every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern. You can download the podcast anytime on iTunes if you can't listen live, and of course another way to listen to all TFNN programming is with your smartphone. Just type in tfnn.mobi. You don't need HTTP or www, just tfnn.mobi in your smartphone browser, and you can listen to the TFNN stream that way as well. I'll be looking at some charts as usual on my radio program today, and if you want to look at those charts along with me and you're listening live on your PC, just tune in to Channel 1 on Tiger TV, right on the home page there. Channel 1 on Tiger TV to look at the charts that I'll be going over today. I write the Ultimate Growth Stocks newsletter at TFNN. I launched the letter in late April, and I update the newsletter every Tuesday, so I sent out my latest update earlier today, and in between updates I will send out email buy and sell alerts when I'm taking a specific action in my model portfolio, or maybe it's just a particularly busy day in the market. I may not be buying or selling, but I may want to provide a market update in between weekly updates, so you can expect email buy and sell alerts and market updates in between each weekly update, which happens every Tuesday. Model portfolio has been pretty quiet recently. I recently moved it to 100% cash. I've nibbled at a couple of stocks recently. I only have 2 stocks in the model portfolio right now, but my strategy is pretty straightforward. It is unique. I use a combination of fundamental and technical analysis when evaluating a stock. I am a big believer in price momentum. In other words, I much prefer looking at stocks that are going up in price as opposed to going down in price. So I tend to do a lot of my buying usually when a stock is within 15% of a high. Sometimes it's within 10%, sometimes it's within 5%. But if there are signs that big investors are in there accumulating that stock, I'm not afraid to buy a stock when it is close to new high ground. So I tend to target the strong price performers in an industry group, not the weak ones, but I'm also careful not to chase stocks. So there are stocks that are extended in price. There's a big growth name out there called Alexion. Let's take a look at Alexion Pharmaceuticals, ALXN, on the NASDAQ. And this has been a tremendous performer in the market, but it is an example of a stock that is extended in price. And this is an example of a stock that I don't want to chase up here. I'd like to see it form a base, and that would give me an opportunity to buy it. But Alexion, their key drug is Soliris, which treats a rare blood disorder. But fundamentals are outstanding at Alexion. But just a good example of a stock that is a bit extended here, and I don't want to chase. So that's basically the strategy for my Ultimate Growth Stocks newsletter and the methodology that I implement. You'd think that after an 8.7% move for the S&P 500 in the prior 5 trading sessions, I'd be actively putting money to work in my model portfolio, but that hasn't been the case because I follow a very strict rule-based system for investing. Currently, I'm just treading very cautiously in this market. Really not seeing enough compelling setups out there to get me overly excited. Seeing a lot of big moves today. We'll go over some of the big movers today, but a lot of the moves I'm seeing are in stocks that, frankly, are technically broken. They are starting to show signs of life again, but the bottom line is that the moves that they're making, like the general market on the New York Stock Exchange, NASDAQ, volume is very, very light. So, Technical Analysis 101 says that when you have a lot of heavy volume to the downside and then low volume rebounds, which is what you're seeing, that typically does not bode well for continued strength. But the vast majority of growth names I'm following right now are showing suspicious technical action at best. So let's go ahead and take a look at what the major averages are doing here with about, what do we have, almost 45 minutes left to go in Tuesday session. Take a look at the S&P 500. It's up, nearly 2 points. Call it 0.1% to 1187.30. Really watching a couple of price levels now on the S&P 500. You have a couple of resistance levels. You've got 1220 back in this area here, and then 1230 back here. But you can see the S&P recently climbed above its 50-day moving average. That's a positive, but that 1220 and 1230 resistance levels are going to be significant to overcome for the S&P 500. Really just waiting for some signs of institutional buying in this market. The volume was very light in the market yesterday on Monday due to the Columbus Day holiday. On the New York Stock Exchange, only 880 million shares traded hands. Today, I was really expecting a better volume push in the market, but at last check, volume on the New York Stock Exchange was only tracking about 10-15% higher than Monday's level. So that's still going to translate into most likely a below average volume session on the New York Stock Exchange. Let's take a look at the NASDAQ. See where the composite is at with about 45 minutes left to go. NASDAQ is up nearly 19 points, 0.7% to 2584. And the level that we're looking at for the NASDAQ here is 2643. That would be its intraday high set back in September. But the NASDAQ is also above its 50-day moving average. And let's face it, the price action in the market has been perfectly fine over the past 6 trading sessions. You can see on the NASDAQ what the volume looks like. These volume bars down here, volume just getting quieter and quieter and quieter. Any technician is going to tell you that that is typically not a good sign, and that's the reason why I'm still being cautious here. But who knows? We could continue to wedge higher here in light volume for a little while. But really, my buy signal in this market is when we start to see a follow-through day or confirmation of a new uptrend. And for those of you who know me and have been listening to me for a while, I was going on Tom's show for several years when I worked at Investors Business Daily, but the folks over at IBD taught me and many other people how to recognize a follow-through day when I first started working there. Basically, we're in the 6th day of a rally attempt for the major averages, and at this point, we're just looking for a big percentage gain, generally 2% or higher, where volume comes in higher than the previous session. It doesn't need to be above average, it just needs to be higher than the prior session. That would be a follow-through day, and it would be a signal that the market uptrend could have staying power. Here we are 6 days into a rally attempt, and we have not seen any follow-through. Now, what market precedent shows about follow-through days is that you typically like to see them occur in a 4 to 7 day window after the first day of a rally attempt. So today is day 6. Tomorrow is going to be day 7, and excuse me, if you see a follow-through day that occurs outside of that 7-day window, it can still work, but ideally you want to see it occur in that 4 to 7 day window. So then the thing is even if we get a follow-through day, growth investors like myself are still going to be sort of left scratching our heads, because what is out there to buy? Have stocks digested gains enough to build good bases and to possibly come out of areas of consolidation? And to that end, the market is still a little bit lacking. So again, I follow rules with my model portfolio. I want to be buying stocks when the percentages are most in my favor to be making money, and I just don't feel we're there quite yet. If we do see some follow through in this market sooner rather than later, I will again keep an eye on my screens and let the market tell me what to buy. But right now, just not not seeing a whole lot. NASDAQ volume yesterday on the Columbus Day holiday was 1.55 billion shares, well below average. Volume today, similar to the New York Stock Exchange, tracking about 10-15% higher than Monday. So looks like another low volume session taking shape for the major averages today. Didn't check the Dow. Let's go ahead and take a look at the Dow Jones Industrial Average. It is down 5 points, pretty much a fraction, to 11,365. So that's a look at what the major averages are doing with about 45 minutes left to go in Monday's session. Stocks got a big lift. I mean, there was a really solid day for the market yesterday. NASDAQ up 3.5%. S&P 500 up 3.4%. But again, here I am. I'm looking through my screens. I'm just looking for something to buy, and it's just difficult with the rules that I follow, the types of characteristics I like to see in a stock. The lack of volume in this market is problematic. And again, I tend to do a lot of my buying when institutions are buying. It's just not clear to me that institutions are coming into this market yet. I suspect they will at some point, but the volume clues hopefully will be there, because big volume always gives them away. But the big gains Monday were driven by this news out of Europe. I mean, it was kind of just a headline that basically said that German Chancellor Angela Merkel and French President Nicolas Sarkozy reached an agreement to basically recapitalize the European banks. Details won't be available until later this month, but stocks took that as an opportunity to rally sharply on Monday. It's a very quiet week of economic data this week. Of course, last week on Friday, stocks had another reason to rally when it got wind of a pretty decent payroll report that showed non-farm payrolls rising to 103,000. That was nearly double expectations of a 60,000 gain. Private sector job growth also came in better than expected at 137,000. Unemployment rate still at 9.1%. And while the jobs data last Friday were better than expected, this economy is going to have to create a lot more than 100,000 jobs for the employment rate to start heading meaningfully lower. We're probably looking at 250,000 jobs a month before we see the unemployment rate start to head lower. Speaking of jobs, interesting note from the New York City comptroller today. Basically not good for the securities industry in New York City. The industry faces likely job cuts of nearly 10,000 through 2012 as Wall Street banks continue to struggle. Obviously, revenue growth very difficult for them to operate. Right now, not very clear earnings visibility. Again, bottom line and top line growth is probably still several quarters away. We'll see what earnings look like at J.P. Morgan on Thursday. Earnings there are expected to fall 5% from a year ago to 96 cents a share. Sales down 2.5% to $23.7 billion. Quick look at J.P. Morgan ahead of its earnings report on Thursday. And we'll see the stock is up 7 cents, 0.2% to 32.37. Technically a damaged stock. Still has a lot more work to do to repair itself. You're listening to Breakout Investing, folks, on TFNN. We'll be right back.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Direction Shares Leverage ETFs fuse the benefits of exchange-traded funds with the innovation you expect from Direction, providing investors with opportunities to magnify their short-term perspective, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. Direction Shares, ETFs to the power of X. To learn more about Direction Shares, click on the Direction banner on the front page of TFNN.com or call 866-476-7523. There is no guarantee that the funds will achieve their objective. The ETFs are not suitable for all investors and should be utilized only by sophisticated investors who understand short-term trading, leverage risk, consequences of seeking daily leverage investment results, and intend to actively monitor and manage their investments. An investor should consider the investment objective, risk, charges, and expenses of Direction Shares carefully before investing. The prospectus contains this and other information and can be obtained at directionshares.com. Please read the prospectus carefully before investing. Distributed by Foresight Fund Services, LLC.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. You know, about an hour ago, there was some interesting national news that broke. I don't know if you heard it, but I will mention it, that the Justice Department charged 2 men earlier today with allegedly conspiring to kill the Saudi ambassador to the United States. Attorney General Eric Holder is blaming Iran. He said the country also paid men to bomb the Saudi and Israeli embassies, and Holder is holding Iran responsible. So good news out of Washington, D.C. An assassination attempt for the Saudi ambassador to the United States was thwarted by U.S. authorities. So good news there. I mentioned the lack of volume in the market during the 6-day rally that we've seen, and seems like, you know, almost on a daily basis when you see a lot of these growth names moving after some pretty serious selling in the broad market that, of course, spilled into, you know, some of the market leaders, where we were seeing some pretty clear signs of institutional selling. Many names have bounced back in light volume, so not much conviction behind the recent rally. But one name out there that's interesting. It's a small cap stock. It's ticker SIMO on the NASDAQ, and it has a market cap of around $430 million. The company's called Silicon Motion Technology, and a pretty interesting technology here. It's a fabless semiconductor company. They basically design and develop high-performance, low-power chip solutions for the multimedia consumer electronics market. And growth prospects are pretty solid here. And the thing about Silicon Motion is that you do have a little breakout happening here over $14 a share. I don't think the stock is extended yet. When the company reported second quarter results a few months ago, sales were up 59% year over year to $50.7 million. So not a big company, but a company that does appear pretty well positioned for growth and valuation. 16 times trailing earnings seems pretty reasonable. Probably more importantly, it's one of the few stocks out there that where I'm actually seeing signs of accumulation. In other words, you can look down at the bottom here and see these blue bars, above average volume price gains as the stock is moving higher. So Silicon Motion Technology, a little-known name in the chip space that appears well positioned for growth. Shares up 4% today to $14.13. Small company, though, fairly liquid. Average daily volume of a little more than 500,000 shares. Market cap of $430 million, but interesting company. So Silicon Motion Technology making a nice move today. Well, we would be remiss if we didn't talk about Apple. It's having a good day today. I took a lot of flack. I wrote a piece at Real Money earlier this week saying that really not much bad you could say at all about Steve Jobs, but that I didn't like the stock up here. I thought that it was starting to look tired. Well, Apple has bounced back. Again, the thing with Apple, let's take a look at Apple here and see how it corrected sharply off its recent high of 420, came all the way down to its 200-day moving average to 355. It really looked like the stock was about to roll over, but it found support at its 200-day moving average and then has rallied back. But look at the volume on the downside and look at the volume on the rebound. Okay, it just doesn't jive, folks. It just doesn't jive. Heavy volume declines followed up by low volume gains is a big no-no in technical analysis. Now, to me, it says that this move can't be believed, but then again, Apple is a very difficult company to bet against. Obviously, their products resonate with consumers. There was that data pre-orders for the iPhone 4S that was recently introduced, 1 million during the first 24 hours. That beat the old record of 600,000 pre-orders during the first hour with the iPhone 4. So, clearly demand for the iPhone remains strong. And when the company reports earnings later this month, we'll see how the iPad is doing. I mentioned the fact that with the launch of the Amazon's Kindle Fire and the tablet computer market becoming increasingly competitive. The question is Apple, going to continue to be able to successfully fend off the competition? But news with Apple today is there was a small boutique firm, Hudson Square Research, that set a $700 price target on Apple. Stock is up 3% today, $11.67 to $400.48 a share. But bottom line with Apple is that if this does attempt at some point a heavy volume breakout over $410 a share, and I see signs that really big money is starting to move into this stock, I wouldn't be averse to buying it. But the bottom line right now is that it is a base building stock. It's trying to come back after heavy volume declines. No conviction behind the buying recently, so I'm a little suspicious of its move. But if I have to change my thesis, I will. If I see a breakout in heavy volume, we could see a move to 500 pretty easily. So that's a look at Apple. When we come back, we'll take a look at some other NASDAQ 100 names. Amazon, ISRG. Stick with us, folks. We'll be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks. Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to TFNN.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of two emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing, everyone, on TFNN. Thanks for listening in, as usual. My name is Ken Shreve. I mentioned not much in the way of economic data this week, but earlier today, my friends over at Investors Business Daily released their first reading on consumer confidence for the month of October. The IBD TIP Economic Optimism Index rose less than a point, 0.4 of 1 point, or less than 1 point. Let's just say less than 1 point. In October, it came in at 40.3 versus 39.9 in September. Basically, readings above 50 indicate optimism in this index. Below 50 indicate pessimism. IBD conducted the national poll of 909 adults from October 1st to October 5th. So the index is still in decidedly pessimistic territory, but the index does have three components, two of which improved in October. The 6-month economic outlook, that's basically a measure of how consumers feel about the economy's prospects in the next 6 months, that fell 0.2 of a point or 0.5% to 36.7. The personal financial outlook, which looks at how Americans feel about their own finances in the next 6 months, improved 0.3 point, less than 1 point or 0.6% to reach 51.9. So that's still in slightly optimistic territory. And finally, confidence in federal economic policies. This is a proprietary IBD tip measure of views on how government economic policies are working. That gained nearly 1 point or 2.9% to reach 32.2. So slightly better than expected read on consumer confidence. Of course, this Friday, the University of Michigan will be out with its first reading for consumer confidence for the month of October. Didn't get a chance to mention crude oil, gold closing prices today. November crude oil up 40 cents to settle at 85.81 a barrel. Earlier today, OPEC cut its estimate for world oil demand for this year and said it expects no growth in demand for 2012. Meanwhile, gold for December delivery fell $9.80 or 0.6% to $16.61 an ounce. That's $1,661 an ounce. Quick check on the 30-year yield. Let's pull this up here. You can take a look in Tiger TV. It's going to be TYX. 30-year T-bond yield. That was recently trading around 3.11. So bond yields have been on the move, no question about it. Investors selling at the long end. That's resulted in what looks like a 4-session winning streak for the 30-year bond yield. Again, recently trading around 3.11%. And then we'll also take a look at the yield on the 10-year note. That has also been rising of late, also has a 4-session winning streak. Yield on the 10-year now at 2.16 thereabouts. All right, before we went to break, I mentioned Apple. Probably the average price target for Apple is about $500. I mean, there are some estimates for $600 price target. Again, a small boutique called Hudson Square Research said assigned a $700 price target. I mean, valuation is definitely cheap with Apple, but and again, it's I have no doubts that when the company reports earnings later this month, that you're going to see tremendous top line and bottom line growth in recent quarters. I just think that there's a reasonable chance that their rate of top line growth in coming quarters is going to start to slow, and whether or not that hurts the stock remains to be seen. But earnings in the current quarter coming up are expected to rise 55% year over year to $7.20 a share. Sales up 44% to $29.2 billion. $29.2 billion in the quarter alone. At 16 times trailing earnings and 12 times forward earnings, of course, it's a cheap stock based on its growth. So we'll continue to watch this thing. If it does break out in heavy volume, it may be worth a nibble. But I'm just watching right now, a little bit distrusting of the recent low volume gains, not only in Apple, but several other high-quality tech stocks. You're listening to Breakout Investing on TFNN. My name is Ken Shreve. We'll be right back, folks.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before October 15th from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you only have till October 15th to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of the Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real Money Masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks, something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Quick check on the markets with about, 17, 18 minutes left to go in Tuesday's session. We've got the Dow just down a little bit, almost 4 points to 11,429. NASDAQ outperforming, up nearly 18 points, 0.7% to 2583, and the S&P 500 lagging the NASDAQ, but still in positive territory, up close to 2 points to 1196. So as I mentioned earlier, this is day 6 of a rally attempt for the major averages. Still looking for some follow-through in this market. A follow-through day or big percentage gain in higher volume would be confirmation of a new uptrend. I don't think this uptrend can quite be believed yet, and until we see some sort of meaningful follow-through, some signs that money is coming in from the sidelines, I'm a little bit suspicious of this rally. It still could happen. We could see it tomorrow. We could see it. We could see it on Thursday or Friday, or perhaps even early next week. But again, it's best to see that follow-through day occur in that between day 4 and day 7 of an initial rally attempt. The first day of the rally attempt for this market was exactly 1 week ago on Tuesday, October 4th. So today is day 6. Hopefully we get some follow-through sooner rather than later. And frankly, when it comes to my Ultimate Growth Stocks newsletter and model portfolio, I just need to see better setups out there so I can take a position, with relative confidence, knowing that I'm not gonna, get shaken out in a day or 2 or 3 days, and I just need to see better setups for that to happen. All right, moving on. Let's go ahead and take a look at Amazon here. I mean, this stock was performing well. I'm sure it still is today. We'll take a look at the online retailer, Amazon.com. It is working on 1, 2, 3, 4, 5, 6 straight winning sessions, but again, you can see the volume down here, just not much volume at all behind the recent move. Shares are up close to 2% today to 235.44. It is a base building stock here. It is interesting that Amazon is approaching a swing point here of 244, so it's not out of the question that this stock could attempt a breakout. Now, if we get a follow-through day, heavy volume gains for the major averages, I would expect a stock like Amazon to try to make a move towards that $244 price level. And if it does and it breaks through that, I would really like to see heavy volume. Just continue to see too many instances of light volume in this market. But Amazon is expected to earn 24 cents a share when it reports earnings later this month on sales of $10.9 billion. The top line growth at revenue continues to be just unbelievable. I mean, it's a huge company. They've been spending a lot on distribution and technology. That's sort of hurt the bottom line in recent quarters, but investors have looked past that because the company, continues to deliver outstanding top line growth quarter after quarter. And remember, Amazon is no small potatoes. It has a big market cap, 107 billion thereabouts, and to be delivering top line growth of 44% is pretty impressive. All right, let's move on. Take a look at Intuitive Surgical. This is another NASDAQ 100 high quality name. It is setting up. I mean, this is another example of a base building stock. Here's the start of the base over here. And remember, folks, you can look at these charts in Tiger TV right on the homepage of TFNN.com. You can look at these charts live right along with me. If you can't listen to the show live on any given day, you can go to channel 13 in Tiger TV and view the archived show that way. Okay, but if you want to watch it live, channel 1 in Tiger TV to see these charts. Here's a look at Intuitive Surgical. Stock is up better than 1% today, $5.11 to $384.48. Start of the base over here in July, came down, corrected down to about $320 a share thereabouts, started to work its way higher, swung lower with the market, and now it is approaching a swing point of 402.35. So still has a way to go, maybe 15-20 points or so, but this is where the breakout point would be in Intuitive Surgical. Now, these breakouts are going to have a hard time working until we see some follow through in this market. I mean, let's call a spade a spade. The record of breakouts in recent weeks, yeah, there have been some, but by and large the majority just aren't working. There's not enough volume in this market to fuel breakouts. That's the underlying issue. Look at Intuitive's recent gain over the past 6 trading sessions or so. Again, volume just getting lighter and lighter and lighter. Don't like to see that. Take a look at move on. Take a look at Cerner. Cerner here. This is a healthcare IT services company. Basically helps the healthcare industry operate more efficiently. Good example of support at the 50-day moving average. Stock may be worth a nibble here, but again, are there signs it's being accumulated? I don't think so. You had some distribution down on the left side here. You see these heavy volume and then low volume on the rebound. Still, it has so far found support at its 50-day moving average. Stock is up 1.5% today to 69.44. Outstanding fundamentals at Cerner. I consider it one of the highest quality names in the software medical industry group. Move on. Take a look at Hansen Natural. HANS on the NASDAQ. Hansen Natural, another stock that has been in rally mode, up 6 days in a row. Volume on the light side. It is back above its 50-day moving average. You could see a breakout in this name as well, but I just think it needs more time. And I can also pull up a weekly chart of Hansen. The other concern here is the fact that it has made a tremendous price move over the past couple of years. So a huge price move already. Recent action in its weekly chart looking a bit choppy. Even if it does break out, I probably let this one go up without me because it has made just a tremendous price move already. So that's Hansen Natural. And then let's go ahead and take a look at Ulta Beauty, because this is an interesting retail name that still has a fairly intriguing technical picture. It's still holding above its 50-day moving average. The stock is down 1% today to 68.54, but Ulta Beauty, again, if we see some follow-through for this market, you've got a resistance level here of 71.87 and also 74 up here. Not out of the question that this one could try to make a move as well. One of the few stocks in the market that continues to show signs of accumulation, some decent volume in this name recently. You're listening to Breakout Investing, folks. We'll be right back.
Hi, folks. This is Tom O'Brien.
My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, everyone. Ken Shreve with you, Breakout Investing on TFNN. We had some brief technical difficulties with Tiger TV. They should be fixed. Apologize for that brief inconvenience. But I mentioned some of the big movers today are stocks that have been technically damaged, or stocks with weak technicals that are sort of moving nicely off their lows. Let's take a look at Google. Google is actually set to report earnings on Thursday. The stock is up 1% today to 543.11. Just today climbed above its 50-day moving average, still underneath its 200-day line at $559.66. So I still look at Google as technically a weak stock, a stock that I don't think is buyable down here. You have to remember that there were a lot of people that bought Google on the way down from 620 all the way down to 490. So it's going to be a long road back for this stock. It's going to face what's called a lot of overhead supply or selling pressure as it tries to work its way higher. Now, that said, Google is expected to report earnings this Thursday, so we will see what the company has to say. Other damaged stocks, stocks with damaged charts that are making moves today. We can take a look at Priceline. Just another stock that I'm not a fan of up here. I wouldn't be surprised to see a strong quarter. The company does have a pretty good record of reporting good growth on the top line and bottom line, but Priceline has made a good move off its lows recently, but still a stock that is stuck underneath key moving averages like the 50-day moving average and the 200-day moving average. So still a lot of damage done to Priceline. You can see the heavy volume distribution that took place in recent weeks, and a low volume rally after it hit a low right in this area here. So shares of Priceline up 1.8% today, $8.77 to $492.62. Still a damaged stock. I would also put Baidu in this group as well. Not too much in China interests me at this point. Shares of Baidu up 4% today to $129.45. Still stuck underneath its 200-day moving average. Stock has really suffered a lot of damage. Now, if Baidu starts to show signs of accumulation, heavy volume price increases in coming days, and it tries to eventually make a move over $150 a share, I would consider buying that breakout, but only if I start to see signs of accumulation in Baidu. And the same would hold true for CF Industries, a fertilizer company. Stock is also outperforming today, up 4.5% to 146.65. You can see all these charts look very similar, just hammered by institutional selling in recent weeks. Not much in the way of volume on the way back. I really look at names like Google, Priceline, Baidu, CF Industries, kind of damaged goods at this point. And again, my strategy for ultimate growth stocks is to buy technically healthy, not only fundamentally healthy, but technically healthy stocks. And these four names are lacking in terms of the technical picture. All right, after the close, coming up, Wall Street will be listening intently to what aluminum giant Alcoa has to say. I guess Alcoa unofficially kicks off earnings season. The aluminum stock has been in a nasty downtrend since April. We'll pull up a chart of Alcoa, see how it's doing ahead of its earnings report. Shares up 2%, so maybe some optimism, maybe a lot of bad news already priced into this name. Alcoa up 2% to $10.30. The consensus estimate calls for profit of 22 cents a share, a 144% increase from a year ago, with sales up 18% to $6.2 billion. Tomorrow we'll get a look at earnings from soft drink and snack maker PepsiCo. It's expected to earn $1.31 a share, up 7% from a year ago. Sales should be up 11% to $17.2 billion. JP Morgan and Google report on Thursday. All right, that'll do it for this edition of Breakout Investing. We've got the Fed Minutes tomorrow. I believe that's 2:15 p.m. Eastern. I'll also be calling in to Tom O'Brien's show tomorrow. Tune in at just after 4 p.m. Eastern. Have a great afternoon, everyone.